Hedge funds are buying stocks. Hey everyone, it's Wolfgang. So as you probably know, both the NASDAQ and the Dow were up to records today. There's a lot of buying by hedge funds. There's been a lot of sitting on the sidelines of these large investors. That has come to an end. So I want to discuss that. So they're buying a lot of the information technology stocks. So tech stocks, people might say they're in a bubble, like in the 2000 timeframe. It's not true, and I will explain why it's not true. It's different. But hedge funds are buying information technology stocks. There's a really good reason for it. Right now, it's the largest amount of buying of technology stocks in the past 7 months by hedge funds. And the U.S. economy is starting rate cuts. The rate cutting cycle is going to start in the next coming days when the Fed starts to lower interest rates. We are in a decreasing interest rate cycle that will improve the economy. So hedge funds are buying. Right now, they're buying a lot of the information technology stocks. Today, the NASDAQ and the Dow reached records. So many companies have strong earning per share growth. That's one of the big differences between now and the dot-com bubble. So people say we're in a bubble now that compares to the 2001 dot-com bubble. No. The stocks back in those days were hype. They really did not have earnings. The companies now that are being bought have great earnings per share growth. Okay, so hedge funds in the first part of 2025 and last year were kind of in risk-off mode. Okay, hedge funds were waiting for a direction, an economic direction to appear, to manifest. Some indicators, what direction is the market heading? We don't want to put a lot of money at risk until we have a sense of where the economy is going in the U.S. So there were concerns about economic problems in the U.S. and concerns about poor earnings. Okay, so like I said, we're in a rate cutting cycle. Right now, we're going to start a rate cutting cycle here that will see rates ratchet lower incrementally. That's a strong indicator of improving economy, and I will explain why. Okay, I'll get to the point in this where I will explain why lowering rates is going to help the economy. So hedge funds were on the sidelines because they were concerned about economic problems and poor earnings. So the indicators at the beginning of the year were not favorable. There were a lot of concerns. That's kind of gone now. And you can see that in the buying of stocks. We're at records. There are major economic trends, and hedge funds are acting on them. So the interest rate cutting cycle is one. The fact that jobs are now being focused on as an issue, that issue will be fixed. That's another trend. So why are hedge funds buying now? Okay, interest rates are dropping. I sort of covered that. Okay, so why does a drop in interest rates help the economy? Why does that provide an economic indicator for hedge funds to start buying stocks? Because when interest rates drop, that means spending in the economy will increase incrementally and slowly at first, but a small number of people will take advantage of the fact that interest rates are lower to go out on a limb more, to take on more debt. That involves buying new or used car, taking on a mortgage. Mortgage rates have dropped quite a bit. Okay, and one thing about mortgage rates, when mortgage rates drop, that helps all the tradespeople who are hired to prepare a home for sale, right? That would include painting, landscaping, maybe roofing, and interior tradespeople like flooring, etc., to get the old place ready for sale. Interest rates are dropping. Those tradespeople will be hired. Those tradespeople being hired will help the economy. Okay, for the new home that's being bought, again, tradespeople will be hired in some cases to make that home more uniquely suited to the person buying the home. So flooring, maybe kitchen cabinets, bathroom remodels, and so on. Painting, landscaping, those sorts of tradespeople will now start finding work. So that's an economic indicator. Spending will increase. All the people who are buying the home because interest rates are lower, and all the tradespeople being hired have more money to spend. That will increase consumption, okay? So consumption in the U.S. economy is 70%. What did I put there, 20%? Whoa! So that's a typo. It should be 70%. I don't have my marker with me, so I won't correct that now, but that's supposed to be 70% of GDP. Consumption, that's people buying stuff, new, used cars, buying homes, using their credit cards, businesses using credit to take on projects or to buy things they need. But consumer purchases, the consumption side of the economy, is 70% of GDP. So the U.S. economy is starting to improve right now. We're seeing lower interest rates for mortgages. we're seeing, we're going to start seeing the home buying and selling market start to recover, start to pick up because mortgage rates have dropped. Okay, so which parts of the economy are being bought more by hedge funds right now? Okay, at the current time. So all providers of AI chips are being bought. This is a trend that is not going away. I mean, if you look at the adoption rate, there's a large percentage of people in the US who know of artificial intelligence, but whether or not they know how to use artificial intelligence, that's a different story. So we're sort of at the beginning phases of people's awareness of artificial intelligence. That's good for growth. That means companies that sell products like AI chips that support that growth, those companies, their stock will be purchased. Their stock is being purchased by hedge funds. I'll give you some evidence of that. So also, digital infrastructure companies that build data centers. Digital infrastructure, data centers, they're growing like hotcakes. They're doing well in the economy right now. That's not going to change anytime soon because the artificial intelligence phenomena is just kind of at the early stages. And this is different from the internet. Before the web came along, the internet existed, right? There was modem dial-up. It was just when the graphical user interface was added by Netscape in the mid-90s that the World Wide Web took off. This is a little bit different. This is a new technology, artificial intelligence, a new way to, basically you have someone who is at your beck and call. You can ask questions, tough questions to, and you'll get reasonable answers. You'll have to make sure that you've got accurate answers. But so that's picking up. Power providers and power generation. Any company that sells power providing or power generation is being bought. So hedge funds are buying providers of AI chips, digital infrastructure, companies that build data centers, companies that companies that build power supplies for these large AI needs, and construction companies that build the power providers. So Elon Musk, for example, has energy storage. He's got an energy storage part of his business that he sells these large energy storage devices. So the companies that build those sorts of things are being bought by hedge funds. The power providers, the actual companies that generate the power, they are also being bought because they're being asked to help solve this problem of power need. So this is another thing that's different from the World Wide Web in the 2000 timeframe, the stock market crash in 2000. We did not really have a power generation issue back then. We do now. Huge power generation problem. I'll get to that in a couple minutes. Okay, here's a ranking of companies that are providing artificial intelligence computer chips. We all kind of know that NVIDIA is the leader, right? They're at $3.5 trillion revenue. And, they're a major provider of artificial intelligence chips, and they cannot keep up. They cannot meet all supply. They are meeting out, they're sort of picking winners on who will get the largest quantities of AI chips. I covered that in a prior video when I talked about Larry Ellison and the fact that Oracle was doing so well. So NVIDIA, $3.5 trillion, AMD, $278 billion in artificial intelligence chips. Intel, despite Intel having stumbling a little bit, $195 billion in artificial intelligence chips. Broadcom, $385 billion. Samsung, $420 billion in AI chips, and there are others. So the AI chip space is being bought by these hedge funds. These hedge funds are now saying, okay, the economy looks like it's being, we're in a direction, an improving direction. We have got interest rates dropping. We've got the housing market that will start to improve. We've got people being hired because the housing market will revive. So hedge funds are buying these stocks. So especially the leaders like NVIDIA. Okay, so the power shortages, this is a big problem. So I wanted to get to this because some people may not be aware of how much of a problem power shortages are right now. But I think a lot of us have heard about this, that artificial intelligence is a big user of power. So AI demands for power is a big problem for the near future. In near future, I would say 12 to 36 months. I don't think they're going to be able to solve this too quickly. I think Elon Musk is building a large data center in the middle of the country, but he's using portable power generating capability because he cannot hook up to more permanent power generating capability. So the power generation problems. There are permits involved. There are impacts on the environment involved. There's a lot of stuff involved that is slowing down the solving of this problem, the power shortage problem. So we did not have this issue when the internet was taking off. During the dot-com bubble burst, there were a lot of companies that were all hype. They never had any earnings like these companies have now. So this stock market is different from 2000 and 2008. So I couldn't fit everything on the board. So the buying of tech stocks that hedge funds are doing now, it's really driving the market up to new highs. It's justified by profit growth. Okay, there's actual profit growth in these companies. These companies, providers of AI chips, companies building data centers, companies providing power, and companies that are constructing the sources of power generation. You know, these companies are making money. This is not hype. These companies are not hyping the sales that they've got, especially the chip makers. NVIDIA has so much demand for its chips, it cannot keep up. And there's a big problem with power generation. So in the dot-com bubble back in 2000, like I said, stock valuations were hype, a lot more hype involved. You know, there was expectations of earnings that never materialized. So that all being said, even though there are a lot of good signs here and hedge funds are buying and pushing the market to new highs, me personally, I would say the following. Buying individual stocks is a bit risky. You might be better served protecting yourself and buying an exchange traded fund that holds a basket of stocks in an area that you're comfortable with for downside protection. So you might say, okay, 1% to 5%, I'm going to buy technology. The rest of my portfolio for stocks, I'm going to buy a basket of things that will do well because the economy overall is improving. We're in an interest rate declining cycle. We're starting to see lower interest rates. That is going to continue for a while. So if you hold a basket of stocks that represent the entire economy, that will protect you. If you start buying individual stocks, I haven't done that in a long time. I do not recommend that. Hedge funds, that's one of the things they like to do. They like to pile on with a few stocks, like one or two big names. So they have they have skills that and time involved in making those selections and managing those investments. Most of us don't have. So I don't recommend buying individual stocks, especially the companies that right now, anyways, have very high valuations. You want to look down the road and say, where is this investment going to be in 12 months? Maybe I should hedge things a little bit and invest in the broader economy in an exchange traded fund that holds stocks that represent the broader economy. So that's just my my takeaway, my piece of advice. Even though hedge funds are doing a lot of buying, you saw what happened in the markets today. Both the Dow and the NASDAQ, they're hitting amazing highs. It's great, right? Is it going to last forever? No, because eventually the power shortage problem will be solved. Eventually, the demand for artificial intelligence chips, it's not going to be gangbusters like it is now forever, right? So the power problems, the data center building, eventually that's going to kind of level off. Right now, it is growing. You can make money in stocks like hedge funds are doing by investing in those kind of companies, but think long term. So if you have any questions about this, I'd be happy to answer any questions you have in the comments. And a lot of us have got, and obviously we have investments in these areas, among others. I'd be happy to answer any questions you have if you put those in the comments. And I really want to thank everyone for watching. Have a great day.